Welcome to Java. Thank you kindly for joining me. It's November 8th, 2024, and it's Friday. So hopefully we're looking forward to a great weekend. Got a little easy today to make sure that you can have an excellent weekend. And we're going to go into a few things towards the end. But first, I would like to send a shout out to those of you that showed to the cryptocurrency conference last night. I think it was a really good one. We've got a shift happening in the finance of the world, basically going to cryptocurrencies, whether people like it or not. And I understand quite a few that have hesitancies on this. However, we've got a couple of options here, basically going into cryptocurrency, stacking precious metals, silver, and gold, because currency wars are continuing. So let's go into what we've got as far as starting with today. Now, the MMRI has pulled back a bit as far as the risk factor from yesterday after the Fed's meeting, 278.8 at the moment. We've got people deep into the greed territory again, jumping into the markets, retailers back in, but we've got a couple of odd divergences that are happening. So I was speaking about this yesterday. Since the elections, there have been a few currency trades going on in the background, in particular between China, Japan, some of the larger debt holders of the US dollar, and the treasuries. Now, the sales of the treasuries have been significantly shifting. So, what do I mean by this? Right now, at the moment, we've got the 10-year yield and the dollar both pulling back. Now, both of these surged the past couple of days, and yet the stock markets went up. Normally, they move in a different direction. So right now, we basically got the stocks looking pretty much flat, slightly green at the moment, but for the most part, they're flat. We've got gold under very slight pressure. Oil is down. Oil is looking weak. I think this is on the prospect of peace and lower demand in the Middle East. So with this, we've got the futures pretty flat as well, but looking a bit more negative. We've got cryptocurrencies that are telling us they're still in pretty good position, staying above 76,000. There are some very definite calls for increase toward the end of the year, which is less than 2 months away. I've got a few people saying basically heading towards 100,000 for Bitcoin. Now, this is not financial advice, does not have to go there, but that is the general consensus, is that basically cryptocurrency is going strong. So with this, I'd like to go just a little bit more into the 10-year yield and relative strength of the dollar, because these are the ones that we're watching. So yesterday, we had two things really that were significant. The first was the jobless claims. Now the market has seemed to completely just absorb that last week's jobless claims were completely dismal. Now, with all of this, we had the Fed announce, as expected, their quarter-point rate cut. So with this rate cut, we also had some questions after. And he was asked if he could be basically fired from his position when the new administration comes in. And he very clearly said that that is not permitted under the law and he is not going anywhere. Now, I know a lot of people would like to see him replaced, but I would urge a good look at who would replace him prior to trying to do that. So with this, the market sentiment at the moment, they got the quarter point cut. So markets continued up. However, I think those are kind of winding out today. We're also in a Friday where the market makers are basically going to clear out the trades and attempt to do their best in clearing out as well the options trades and the derivatives. This is how the market is designed and how they make their maximum money. So we're going to have, I believe, the probabilities are what I call a salad day. Little red, little green, lots of chop. I'm basically looking at these days as good days to sell theta, if you know what that is. If you don't, you probably are not allowed to anyway. So with this, I'd like to go into a few things going on today. Friday, we've got our consumer sentiment coming in, and then Fed presidents coming out to speak again. So as we know, they always manage the markets kind of back to where they would. Um, Now, with the treasuries, I would like to go back to those because we're talking about China approving $1.4 trillion in debt package, basically QE, to boost their economy. Their stock market went down. Again, that is also opposite normally on QE that gives stock markets a boost as you're crushing your currency, but you're letting it flow elsewhere. Now, they own a large amount of treasuries, United States treasuries. With the treasuries going down, basically, it looks like a sell off between the yields that were spiking the past couple of days. Now they're retreating again. And the United States stock market still basically pulling back a slight bit, but also with China. So this trade that's going on in the background still remains there, but we've got to watch these foreign currency trades. If they find that this is not enough stimulus for their market, they may feel the need to sell off much larger amounts of the US debt. If they do that, that could cause a problem for the United States markets. So with this, we've got Goldman Sachs slashing the growth forecast for Germany, the UK, and wider Europe. So the West basically in trouble as far as Western Europe. United States, not that much stronger. We've got some issues showing towards basically deflation coming in, deflation in some effect. Now, we've got Germany saying basically that the Ukraine aid is what caused the government collapse. There's fired Lindner and said that he had to be sacked because he refused to increase the funding for Kiev. Now, their economy is in trouble and they're pushing towards basically more money towards Ukraine, similar to what the United States is doing. Now, their main manufacturing is Volkswagen. Now, new in the news again, they have to recall over 114,000 vehicles due to airbag safety. Now, this is a real recall, not just a software recall. So this is going to basically hurt their manufacturing again. They're shutting down minimum of 3 factories and their unemployment is going to increase as all of those workers are let go. Now, alongside this, we've got the United States in Ohio, basically the equivalent. We've got Stellantis trying to reduce their inventory. They have a glut of inventory in the market, which is basically killing their price structure. So we've got 1,100 workers basically in the Jeep plant facing layoffs for the same reasons. Now, housing, I'd like to jump to here slightly because Florida boom in metro seeing the largest drop in home prices. Well, they also went up the most during this kind of housing price madness, showing the inflation. Now, with this, I would like to go back to the fact that every time they're printing to get out of all these messes, every time they're printing to send to Ukraine, it's massively inflationary. We're still on the path of inflation, although we're set for a severe period, short period of deflation in severity, lower demand. So, in general, inflation in the long term, hyperinflation, superinflation. We've got world prices in food also rising, 1.5 year highs right now. So, this is globally. The FAO Food Price Index that they measure this is global. It's not just Western world, United States. So we're watching inflation have its effect across the board. All of these things priced in dollars, US dollars. So we're going to have definite shift, as I was saying, to cryptocurrencies and the digital process in general. So what's next for Bitcoin after hitting new all-time high? Well, it's going to continue, in my opinion. So we've got Trump's crypto aid saying that the United States should act quickly to incorporate basically a strategic Bitcoin reserve. They've been talking about this. We'll see if they do it. There could be pullbacks, as there are with them temporarily. Also, precious metals, as they're getting hit, they already look like they are recovering a bit. Gold and silver in particular. Now, these are real assets, and as this inflation happens, you will see it in the prices of these increasing as well. So, tokenization, a quick word on this. This is outside of the payment sector, but we're watching basically tokenization from BNB chain. They've got a new solution for this, and they're offering this as a service. Their firm Standard Chartered, basically real world tokenization, saying it could reach a $30 trillion market cap by 2030. How do they do this? Various forms. Uh, NFTs is a large part of it. There's a company called OpenSea, and they're talking about a major comeback. Now, this was a company that used to buy and sell NFTs, but I think there's more than that. You can create your own, but basically service coming out that will take care of that for you. Okay, going over to crypto payments again. Now, we've got a shift in the divide here. First, the cryptocurrencies as far as like banking and taking care of currency directly. But currently, if you travel to basically any place that would trade outside of US dollars, you've got to convert to currencies. Credit cards make this easy because they do the converting in the background. We've got MasterCard's Pay Local, connecting 2 billion users to local merchants, over 35 million local merchants, basically expanding what they're doing. It's all digital already. They're just going to put it on the blockchain, will be the only difference. When they are doing this transformation for digital payments, they're going to do the same thing as they do with global currencies and just do the transfer and conversion of the difference in values. So we've got also crypto payments that can be as easy as paying with credit cards. What is this? Different payment services companies, they're speaking about foreign pay. So it's just another competitor, if you will, to this digital payments, MasterCard getting into it, Visa's in it, now foreign pay. We've got also Kraken is an exchange. They're going into a layer 2 DeFi bridge, and this is also to put current cryptocurrencies on this exchange. So they're heading towards making it easier, simplifying it, less expensive. And that, I believe, is when it will be more widely adopted, or, if you will, it will be forced eventually. So with this, that's what I've got for you today. I hope you have a wonderful day, wonderful weekend, and until I see you again, stay free.